everyone. Welcome to this week's edition of Business Casually. I want to thank you guys for tuning in. I've been having a lot of fun doing this project, and we finally made it to week 9. So there's only 2 weeks left, and I wanted to do something special. I thought I would do a two-parter, and since I'm a tax guy, obviously it's going to be about tax. So this first week, we're kind of walk through a 1040 form, hit up the important details that I think you guys should know about. And then next week, we're actually going to jump in and show you how to calculate an estimation of how much you're going to owe to the IRS, whether you're withholding the correct amount, and actually whether you should expect to have a refund come tax time or whether you're going to owe more to the IRS. So tune in next week to see that. But let's go ahead, let's jump into this week's, and let's try and explain the business of your individual tax return casually. So as you can see, this is a draft tax return. The IRS usually takes a little bit of time after the end of the year to kind of finalize these forms before they send them out. They want to make sure they're perfect because obviously if they're messed up, that could cause a lot of problems. So we're going to look at a draft tax return today for 2020. And right up here at the top, we see filing status. This is something very important for you. It helps determine what tax rates you're going to be taxed at, what the amount of standard deduction you're going to receive. So I want to point out a few of them. The first one is single. This is how most of us college students will file. There's also married filing jointly. If you are married, you can file collectively with your partner. There's also married filing separately. This one's kind of an odd one. You don't see that very often. And then there's also something known as head of household. So not something that will really apply to us, but something that's good to know that at least there's 4 different options for your filing status, depending on what you qualify for. So moving down, obviously you need your name, social security number, home address. And then we get kind of into more of the tax questions. So if you're claimed on your parents' tax return as a dependent, you would check this box here. Someone can claim you as a dependent. And then on your parents' tax return, they would fill out this section right here with your first name, last name, social security number, relationship, and then actually whether they're able to claim any credits because you are their dependent. So down here, we actually start getting into the money part of the tax return. So this first line, very important to us. This is our wages, salaries, and tips. This is how most of us earn our income. This will probably be the biggest amount on our tax return. So, and these amounts flow through from our W-2 that our employers send us at the end of every year, and you just kind of pop that in TurboTax or send it to your tax guy. It's pretty simple and easy, but that's where that income flows through to. And obviously there's other ways to earn income. We're talking interest, dividends, capital gains. And this whole first page is kind of working through all the income portions for your tax return. So on Schedule B, you're going to see items such as like your interest, your tax exempt interest, your qualified dividends, your ordinary dividends. And so these are amounts that flow through on 1099 consolidated, 1099 dividend, 1099 interest. These are just amounts that if you have like a brokerage account and you're receiving interest from things and you're receiving dividends from things, they will send you a 1099 and it will have those amounts and then the actual taxable amounts along with it. Now lines 4 through 6 don't necessarily apply to us too much, but I wanted to point out line 4 because I talked about it in an earlier week of Business Casually. We have IRA distributions, and obviously there's going to be some taxable amounts depending on which kind of IRA you're involved in. So those amounts flow through here on line 4B. And finally, we get to capital gains. Capital gains is something huge for us later on down the road when we start selling off stocks and things of that nature. So I wanted to jump in and take a look at Schedule D. So there's 2 different kinds of capital gains and losses. There's short-term capital gains and losses, and this is for assets that are held for less than a year. And then there's long-term capital gains and losses, which these are assets held for more than a year. Excuse me. And the reason they separate them out is because long-term capital gains will receive a favorable tax rate over short-term capital gains. And the way you fill this form out, you just need your proceeds, you need your costs, and that'll help calculate your gains and losses. And these amounts flow through to the face of the 1040, which you'll see is very common. There's a lot of forms that are hidden kind of behind the 1040 that help calculate all the numbers. And then they do all the calculations and it flows it to the face of the 1040. We have line 8, which is just other miscellaneous income. We can take a look at that real quickly. We're looking at other capital gains and losses. Business income, this is, for example, if you own like a sole proprietorship, this is where that amount would come through. Line 5 is another big one. This is like your rental real estate income, money from partnerships, S corps, trusts. So oftentimes you'll receive a Schedule K1 from partnerships and just these flow through entity businesses, and you'll have to pay tax on a portion of their income depending on how much of the business you own. So those amounts flow through on your Schedule E, which come to Schedule 1, which go through the FASA 1040. You can see flowing through. If we go ahead and pop in and take a look at the form again, we have a couple of different adjustments to income. And then finally, we get down here into some adjustments to gross income as down here. And then finally, we get to the standard deduction. Standard deduction or itemizing. This is crucial. This has been something that's been talked about recently, especially because of tax reform. So I wanted to hop in and take a look at Schedule A. And this is where you make your itemized deductions. So there's a couple different ways. We have qualified medical and dental expenses. There's a whole form you can fill out. Typically don't qualify for us, but something good to know about. There's taxes you paid. So anytime you pay taxes to the state of Michigan, Grand Rapids, property taxes you pay, those amounts can be claimed here. We have interest you paid. So sometimes if your mortgage interest can qualify, you're able to take a special deduction on that. We have gifts to charity. This is the most popular one. This is usually a pretty decent size amount. But so if you make a charitable contribution to a 503c organization, which 503c just means it's qualified by the government to be a charitable organization, there's a whole process they have to go through. And once you make this contribution to them, they'll send you a note saying like, here's your taxable deducted amount. And those amounts flow through here on your gifts to charity. So down here, it ends up on line 17, and you get the total amount of total amount of itemized deductions you can claim. So if we look back at the 1040, you have a decision to make. You can either take the standard deduction or itemized deduction. And that decision is purely based on the amount of itemized deductions you have. So the standard deduction is the amount you receive no matter what. It's based off your filing status. For example, single, you get to take $12,400. If you're married filing jointly, you take $24,800. And so basically with itemized deductions, you're trying to somehow get past that amount. But if you're not even coming close, just forget about it. Just claim the standard deduction. It's something that we see more common recently, just because these standard deductions are unprecedentedly high. And most people aren't able to have enough itemized deductions to get over that level. So once you figure out whether you're taking the standard deduction or the itemized deduction, there's this new thing called qualified business income. Most of us won't apply for it, so I won't bog you down with the details. It's just that's something new with tax reform. And so finally, we calculate our taxable income. So if we go down here, we actually take a look at how to calculate our tax, which I will jump into explaining that in more detail next week. But there's a whole form you fill out. It walks you through how to calculate tax. And that amount will show up here on line 16. And so kind of the second part of this are after-tax adjustments to the amount you're going to owe. So we're looking at like tax credits, amounts you withheld. These are directly lowering the amount of tax you have to pay to the IRS. Well, everything up here on this first page was just directly lowering the amount that was going to get taxed. So these amounts down here have greater impact on the amount you're going to have to pay to the IRS. Or not a greater amount, but have a direct effect on the amount. Where up here, it is affected by the tax rates. So if we take a look down here, we obviously have like the child tax credit if someone can claim you as a dependent. Down here is where you're going to see like those educational credits being claimed. On line 25, right here, we have your federal tax withheld on your W-2s or any other 1099s you could have received. 26, if you made any estimated tax payments, if you weren't getting any income withheld from your wages and you decided to make estimated payments yourself, those amounts would go here on line 26. We have the earned income credit, just a lot of credits going on here in all these forms. American Opportunity Credit, talked about that one a couple weeks ago. And so finally, you get down here and you get your total amount of payments towards your tax. And so depending on the amount of tax you had here on line 16 and the amount of total payments you've had, you're going to be able to determine whether you've had a refund or not. So if you have a refund, that amount's going to flow through on line 34, and this is going to be the amount you overpaid for your taxes. And you can input your banking information. They'll just drop you a wire and send you the money. If you owe more than what you currently have paid, that will come through on line 37. And that's when you're going to have to send a check to the IRS saying, I didn't pay enough. This is how much I owe you. And then obviously you come down here, sign it. What's your job? And then whoever prepared your tax return would go through and fill out this bottom part. So that's the 1040 tax return. I wanted to just give you kind of a brief overview for this week before we kind of jump in next week and kind of help you work through calculating your own tax. So I hope you guys enjoyed, and I look forward to seeing you guys next week.